Hello and welcome to the Bob Unger Show, which can be seen on YouTube and on bitchute.com, bitchute.com. I have as my guest Michael Savage, no relation to the radio talk show host, and he is a financial advisor. He'll go more into where he works and how he works. But Mike, just introduce yourself and give us a little background on yourself.
Oh, thanks for having me, Bob. Been doing this for about 30 years, and think it's not too far out there to say that we've never seen anything like what we're seeing today. So, starting the business around 30 years ago, and back then it was nice and easy. It was an easy business. You could just set up portfolios and pretty much everything worked itself out. And, the one thing that we've noticed over these 30 years, and I think it's important to learn from your mistakes, to see what's happened in the past, because the past doesn't necessarily repeat itself, but a lot of time it rhymes, as people say. And, to me, it appears we're heading towards the third crash that we're going to see in this century. And it's pretty stunning to me that most people don't really see it. It's right in front of our face. As a matter of fact, if the Fed wasn't printing hundreds of trillions of dollars, I believe everybody know that we were in a depression since at least 2008, and maybe before that, because things have gone so far off the rails that it's almost hard to comprehend what's just happened over these last few years. If we go back to the year 2000, we had a crash in the year 2000, but we were able to at least mitigate some losses because the stocks, as they fell, the bonds picked us up like it's supposed to. It's the way it was supposed to work. And it worked that way. But the problem is that since then, there's been so much financial engineering that nothing works the way it's supposed to. If we look at 2003 to 2007, everything went crazy. It all went up together. We made a lot of money. And no matter how diversified and how wonderful you thought your portfolio was in 2008, we got a lesson that when everything goes up together, it all comes down together. And I think the disturbing thing I see right now is we're seeing the exact same thing, except it's on steroids. It's about 100 times bigger. And, what I see coming next is going to make what's going on right now look like a picnic. I'm sorry to say.
I describe you as an autodidact. In other words, you somehow recovered from the brainwashing you got in the government schools and in college or wherever, in the media, on television, and in the training you got in terms of the Wall Street companies and various financial entities that you worked for over the years. What was the beginning of your epiphany in discovering that something is not quite right in this financial system?
Well, I'll go back to 1989 when I started putting portfolios together. We had a very simple portfolio of 4 mutual funds that were pretty well diversified. And over that period of time, if you go back and look, and this is assuming everybody had the same exact amount, but that dumb portfolio averaged 17% a year from 1989 to 2001, and that was through the crash. It held up very well. I can't mention the funds, but nonetheless, everything was simple. It was a nice business. You basically set up a portfolio and, have people come in and tell them how great it is. Funny thing is, in 1998 and 1999, I was told how dumb I was because portfolios were going up, 100% if you bought Cisco and this and that. And, we never bought any of that stuff. I couldn't understand how you could buy a company that never made a profit, never made a penny in profit, was selling for $100 a share. So we didn't get involved. We lost a lot of business. But 2000 to 2008 showed that we kind of knew what was going on. When Enron went down in the year 2002, and that was after 9/11 and everything, 9/11, there was nothing you could do. You just said, look, let's hang out and hope they bring this thing back. But when Enron went down and people came in and started asking me, should I buy this? Should I buy that? I'm looking at the numbers and saying, I can't even answer that question. And we took everybody who was 60 years of age or older out and put them in treasury notes for a year or two, and still were able to do okay. In 2003, I had this farmer friend of mine who had a small account with me, and I had taken about 50,000 of his money. He was about a little over 60 at the time, put it into treasury bonds, and he was upset. He was actually mad because the market had started moving up now in 2003, and he called me up, said, listen, hotshot, I'm sitting here in treasury notes. I'm watching the market go up. You come here and tell me what's going on. Luckily, I was able to go there and say, look, I took the 50. If I would have left it where it would have been about 43. And with the market way up, you'd be around 45. We're sitting at 56. So let's start from there. And I remember something that actually Bob Unger told me, along with my brother-in-law, John, when you guys were into the, tuned into success and got me turned on to Nightingale Conant. And Brian Tracy said, if you read an hour a day, within a year, you'll be a national expert. And then if you read X amount of hours a day, you'll be an international expert. So I started reading 2-3 hours a day. And the farmer guy really got me going on it, because I really wanted to find out, where do we go from here? And everything I read said the dollar is going to be starting to get hammered. I want to buy real stuff. I want to buy commodities. I want to buy gold. I want to buy silver. I want to have stocks, but I want to have stocks that make sense. I want to have ones, that produce things. I don't want just crap. And, things worked out very well during that period of time. And we get to 2008. And if you ask me, I would have said we're tremendously set up. We're globally diversified. We have something everywhere. And as the market was struggling the whole year, we actually did our reviews in July, and we were plus minus 1%. We were doing pretty well compared to what was going on. Then October came, and we got the smack across the head, where you could look at some of the things we were holding that we thought were going to be steady no matter what. And you could look at a 30-year chart and see that it was, for 30 years, a big year up might have been +9. And the worst year you saw was maybe -0.25. And then in 2 weeks, it lost 30%. So there was nowhere to hide. And then you had to make decisions as to where to go from there. So, it's been a...
Well, right now, we're in the midst of this so-called COVID lockdown. And of course, coincidentally, the lockdown came coincidentally simultaneous with the market crashing. And of course, it's very easy to say that all of these economic problems are due to COVID. But did you see signs before COVID that this economy was already tanking?
There weren't just signs. There were flashing neon lights that this thing was crashing long before that. As a matter, I write an article every week, and for the last 3 years, I have been documenting how world trade's been slowing down. I've been documenting how sales have been going down, how the only way stock prices were going up was because companies were buying their shares back. The accounting, call it what it is. It's fraud. It's not even accounting, the stuff that goes on to make
Explain how the share buybacks work.
Well, I'm sure all companies do it a different way, but the bottom line is, let's just say you have 1,000 shares outstanding, and last quarter you made $5 of profit. This quarter you made $4 of profit, but you can't let Wall Street know that. So you have to buy back maybe 250 shares. So now you take the $4 profit and divide it into 750 shares as opposed to the 1,000 shares. And now you just beat last year's quarter. So you have less shares outstanding. So your divisor is less. And so it makes your stock look more valuable than it is.
And where do these stock exchange listed companies get the money to pay for the
Well,
buyback?
it's all different. You know, some of them have it there, but most of them are going into the bond market and basically borrowing the money and then buying the stocks back. Um,
So they're
so
buying
basically,
back their own stock with borrowed money in order to manipulate the share price.
of course, so the CEO gets his bonus and everybody else gets their bonus. And then, the shareholders are left holding the bag.
And the guy who goes to work every day with his lunch pail, he's left holding the lunch pail. And that's about it.
He may not have much left after that. Yeah.
Yeah, they'll eat his lunch is more like it.
Yep.
So we have Donald Trump having most of his minions. And I said before in this show, we're not partisans, we're not Democrats, or as I call them, Democrats. We're not Republicans, or as I call them, retardicans. We tell it like it is. We're like a baseball umpire. You throw the ball over the plate, and we call it a strike, and we don't care if the pitcher is a Democrat or Republican. We're not cheerleaders. We tell it like it TIS, like it is. So they used to say in my old neighborhood. So we have Donald Trump saying that this is the greatest economy in the history of the world, not America, of the entire world. And do you agree with that statement? And has it been the greatest economy until COVID?
I'm I really wanted to believe that Donald Trump was going to lead us out of this mess. I really tried to buy in. But when I look at the numbers that are coming out, when I look at what's happening in the actual economy and how the numbers are manipulated, where you have 95 million people they don't count so they can pretend that you have the greatest unemployment rate of all time. When I see world
What
trade,
happened to those 95 million people? Did they disappear at Galt's?
believe it or not, those people still need a place to live. Those people still need to eat. Those people still need services. But they've been out of work for so long that they just don't count. They just don't exist anymore. And a good website would be John Williams, shadowstats.com. He takes the government's numbers, reports them the way they used to be. And if you look at it now, the fake number that they put out might be 14%. The real number is probably closer to 30%. And even if you look at the numbers, like the participation rate, it's lower than it was in the 70s when women didn't work.
We'll talk about the labor participation rate. Explain to the viewers what that means.
That's the amount of working age people who are working versus those 100% that could be working. So basically, you're down in the low 60s. I haven't looked at it in the last few weeks, but if you go back to the 70s, it wasn't that low, and half the workforce, which is women, were mostly stay-at-home moms in those days. So this is really some pathetic numbers.
And a dad could afford to support on a very modest salary, could support his wife and kids without the wife working. Correct?
I may date myself now, but I remember walking through my town. I grew up in a little town in Illinois. And I was walking through the town, and there's right across the yard, there was some people had a really nice pool and nice yard. And I was thinking about what everything cost. And this is probably in the early 70s to mid 70s. And I was thinking, if I could make $100 a week, I could live pretty good. And it was true. What houses cost nothing. Taxes were a couple $100 a year. A new car was $800. So you could live, and that has nothing to do with, nothing's changed except that our money's worth a heck of a lot less. It's been inflated to infinity here. And we haven't seen anything yet. We're just getting going.
And give us some other metrics that you use to judge the health of the economy. Just go through a litany of them, different areas of the economy and what you see happening and what the facts are.
I think when people watch, I really do think people get brainwashed by what they see on TV. I go back to the Nazis. You say something often enough, and it becomes the truth. I mean, if I walk out on the street right now and ask people what the unemployment rate is, whatever they saw on TV last is what they're going to say. For the longest time, 4%, 3%. I mean, look around. How many people do you see who don't have a job? And you're buying this? Are you kidding me? That's the first most important thing. If you don't have income, what are you doing? And then I like to see, like I say, what's going on in world trade. If things aren't going on, if people aren't producing things and sending things around, you look at the Baltic Dry Index, that fell through the floor.
That's a measurement of shipping, correct?
That's the big shipping. And then you look at, the shipping in containers. It's starting to pick up a little bit now, but trucking has been killed. It's hard for me to believe when I'm on the road and I see all these trucks, but the numbers are coming out. Also, the same thing with rail traffic is way down. Now, maybe recovering now a little bit, but that's another thing. If you don't have rail traffic going, that's something that's bad. Electricity consumption, that's another thing you look at. People are consuming electricity, they're doing stuff. What's going on with oil? Is there a demand for oil? That shows a little bit of what's going on. There's a million things you look at. And one thing that a lot of people look at, not normal people, but economists would look at is, how confident are people in the future? And I think there's a whole lot of confidence being lost right now. And that's showing up in the gold price and the silver price and everything else. So
how old were you when you started investing in gold and silver? How far back does
when I ran into my farmer friend in 2003, one of the first things when I started reading, one of the first things I started buying was mining stocks. At that point, I couldn't buy any physical gold other than physical gold. And obviously, being at a brokerage, you can't do that. So until GLD came out and SLV, we were buying mining stocks. And they did very well for us. Let's just say that.
what was the price of gold then, if you remember?
In the year 2000, it was 250. By the time we started buying, it was just a little over 300. So there's been a big move up.
And now it's 2000, basically.
Pretty close.
And what was silver back in those days?
I don't even remember because I wasn't really watching. I didn't buy silver. I started buying silver probably around 2015. I wasn't a big silver fan. I'm the biggest silver fan you could see now. I think it's the most unappreciated asset on the planet. But I think there's something that you look at this paper gold. They talk about paper gold. I'm not a fan. And I can't really talk about individual investments on this, but what I will say is there are certain things that really do have physical gold attached, and that would be very important to, I try and talk people into not dealing with GLD and SLV because I think they suppress the price by doing that.
Yeah. What do you say when you hear, of course, the party in power right now, the Republicans, but if the Democrats were in power, they would say the same thing. When you hear them saying we're in a great recovery because the stock market has recovered a good deal of its losses.
I think it's a smokescreen. Look at the economy. The economy is recovering somewhat, but I don't think we've seen anything yet. You look at these governors who are closing things down. I mean, your state's nuts, New Jersey's nuts, we're nuts here in Pennsylvania. I have so many friends who are in big trouble, who own restaurants, who, they can only have 25% in. They can have people seated outside, but if it's raining, that doesn't work too good. And that's, from what I understand, that's one of the most loose things that are going on. New Jersey, you can't eat inside at all. New York City, you can't eat inside at all. It's a disgrace. The sick part is we closed down the economy when the CDC says the death rate is 0.26. And now somebody I just saw put up that they came out and said that only a fraction of the actual cases were COVID only. So who even knows? It's insane. But this thought of a monstrous recovery, I'd like to see it. There's no evidence of any type of V-shaped recovery, in my opinion, at all.
Do you see a linkage between the stock market and the general economy? And if so, do you see that linkage reoccurring in the future? In other words, we know that the stock market has done better than the economy, but does there come a point where a bad economy will even bring down the stock market?
Well, the answer to the first question, is there any relation from the stock market to the economy? Not right now, no. The Fed's got total control of this. God only knows what they're really printing. I can't use the word guarantee in my practice here very often, but I can guarantee you that you and me and nobody else knows what the hell they're really up to. That I can guarantee you. You know, and we'll find out, I guess, once it all blows up. But you know, the one thing that I think really has to be brought out is that the Fed can print money. Nobody else can. And I think this, like I always say, every fraud, that the seeds of its own destruction are built in. And they can, the only way this can continue is if they continually print money and buy. I don't think they're bailing out these companies. I think they're buying them out. If you look, all the people who are young investors and you know, what do they call momentum chasers, things like that, they're buying the stock market right now. What's the Fed doing? The Fed's buying the bond market. Not only that, they're buying the junk bond market, $4.5 trillion worth. And by the way, here's a group of people who can hit a button and get $1 trillion, and they want me and you to put up 450 billion just in case they take a loss. I don't know. That pisses me off. Sorry, but
I can't understand why.
But the whole point is, in a corporate bankruptcy, and it's unfortunate that people who consider themselves investors, you know, don't look into this a little more. In a corporate bankruptcy, these people who are buying the stocks, and I don't care how good the stock might be, how good the company might be, if the company's over indebted and they default on their bonds, then those bonds that the Fed holds they're gonna be defaulted on. So is the stock, but there's the big difference. The stock is gonna be wiped out for good. You're gonna have 100% loss with no chance of recovery, whereas the bondholder they're gonna do a debt for equity swap, and now here comes the Fed, and they own a company that's free and clear, and then there's gonna be a recovery, and they're gonna make a fortune, and more than likely be in charge of everything because they will have bought. They're not bailing out, they're buying out. Why did they destroy small businesses and keep the big ones there and buy the bonds? Now, maybe I'm a conspiracy theorist, call me what I want, call me whatever you want, but
Well, there's no such thing as the mafia. If there's a mafia, you're a conspiracy theorist.
yeah, I guess. I don't know.
So you think they deliberately, in one way or another, wanted to destroy the small business people, and of course get out of jail free card to the gigantic multinational corporations at the expense of the working man who sees his cost of living constantly going up, despite the fact that the Fed lies and says there's no inflation.
Yeah.
So what areas would you, as a financial advisor, I know that you're not really allowed to give specific recommendations, but in general terms, where would you advise people to escape to? Is there any islands where people can go to protect their wealth? And I'm not talking about buying gun stocks. I'm talking about more strictly financial investments.
Yeah, well, you know, I think one thing that's really important, you know, when you get to be our age, safety is really important. And the one thing I tell everybody when they say, I want something safe, I say, okay, first thing you got to understand is there's no such thing as safe. There's no such thing. No, you know, it depends on how you defines safe. Most people define safe as I put my money in and I don't have to worry about losing too much of it. And that's a good definition, where you think it's safe. But how safe is it when the Fed is printing, I've heard up to $1 trillion a day. I mean, if they're doing that, how safe is your money sitting there earning nothing? So that's not safe. You put it somewhere where, okay, you're going to make a little bit of something, but if it doesn't keep up with what they're doing, that's not safe. You put it in stocks. That's certainly not safe. Are bonds safe now that the Fed's, buying every one of them until they stop? I guess it probably is. But, how long can that go on? And then the bonds, of course, what is a bond? You're going to get your money back in the future. It's going to be worth a whole lot less than it is now if they keep doing this. So that's not safe. And like I said, I can't give any advice, but I can tell you what I'm doing. What I believe, and you have a friend, Peter Schiff, who, a lot of stuff he says, I'm right there with him. Some things not, but I do believe the dollar is getting demolished. I think it's getting demolished on purpose by the Fed because they want to come out with a new one. Of course, you have to have some sort of a catastrophe so that people will be begging for something new as opposed to having to ram it down their throat. So as this goes on, I really believe that you need to protect your purchasing power. And how do you do that? You do that, for me, I like gold. I like silver. I like the miners because that's like having an option on the gold and the silver as the price goes up. And I also like emerging market bonds. And a lot of people say, well, they have all this dollar denominated debt and it's going to cost them more to pay. Now, if the dollar goes down, it's going to cost them less to pay it off. Not only that, but they're not playing these games. They don't have the wherewithal to print $1 trillion a day and go out and buy stuff. So I feel like, even though they may get dragged down a little bit, if everything goes, like they're not going to get dragged down like we are. I think this is, I think avoiding American stuff is important because we're near all-time highs and most other places aren't, so, you buy low and you sell high. You don't buy high and sell low. Well, most people do, but you don't. You're supposed to. So
Imagine if you were the Fed and you didn't have to work to earn money. All you had to do was put it in a bunch of digits on a computer and poof, the money appears. And then you can use that money to buy the entire world. You can buy up all of the assets of the world with money that you never had a bead of sweat on your brow in order to obtain. Gold is something, of course, that you can't print and you can't conjure it up on a computer screen, which is why gold is the enemy of a government that is out of control, because gold is the canary in the coal mine. In the old days, they would put a canary when they didn't have the technology to ascertain whether or not there was poison gas. And when they saw the canary keel over in the cage, they knew there was a problem. So gold is signaling to the American people that there's a severe problem. The only problem is that the American people know less than the canary. That's
well, this is something that's very interesting because they're manipulating the price of that lower too. And I don't think anybody really gets the magnitude of what's going on here. If you take a look at what goes on, if they can't get the physical gold, silver, platinum, palladium, rhodium, the price can explode because it's all being kept down with paper games. Just like they print that money up out of nowhere, they print these contracts up out of nowhere, and they'll sell gold that they don't own, it's just paper, into the market to drive the price down. Now, how do I know that? I've been writing about it for 10 years. Everybody thought I had a tinfoil hat on in the beginning. But now, after billions in fines and some indictments, now it's starting to come out that maybe I knew what I was talking about.
You mean billions in fines to the Wall Street banks.
Yes.
And not you.
Yeah. But anyway, so how do I know this? There's a guy named Andrew McGuire who pointed out numerous years ago that let's just say you or I wanted to sell an ounce of silver and we were going to do it in this market. we want to make a profit. So we'd say, okay, if I don't get at least $25 for my ounce of silver here, don't sell it. That's called what they call a limit order. I'm not going to take any less than this. So what these banks do is they come up with these contracts. There's actually been some where they've actually traded the entire half the mine supply for the entire year of the stuff in like 10 seconds. And they'll do it with a market order. And they'll do it at 4:30 in the morning, 8 in the morning, when nobody's there to buy. And you can just, if you look on the chart, and it's obvious. And there was times when I was looking at the charts weeks and weeks at a time, every day, 4 and 8, 4 and 8, 4 and 8. Now that they're doing it around 11 every day now, I don't know what's going on with that. But if you or I did that, it's what they call naked shorting. You be in jail, I be in jail, but hey, the banks, they pay a few bucks. It's like, I guess they just pay off.
The cost of doing business, right? Yeah, it's the cost of doing business. I interviewed Bill Murphy, who's the head of the Gold Antitrust Action Committee, and he's done a great job. It's called GATA, G-A-T-A. He's done a fantastic job, and they have a website called lemetropolecafe.com. I'm giving him a little plug because he's a great guy, and he's done a fantastic job trying to wake the public up and wake the government up. But recently, Eric Sprott, who's a Canadian billionaire and has a precious metals and investment company in Canada, owns a plethora of gold and silver mines. He called the CFTC, which stands for Commodities Futures Trading. They're supposed to be the watchdog, and they're really a lapdog, unfortunately. He called them a loser organization because they've got all the evidence in the world, and they've really never done a thing. Every once in a while, you'll see a token fine. They catch these bankers that are committing all kinds of fraudulent, misleading trades, and they slap them on the wrist. But small relative fines to these bankers is nothing with the kind of money they pull in. But unfortunately, the American people are asleep. As my father used to say, some people make things happen, some people watch things happen, but most people just say, what happened? And that's most Americans. And this is how the crooks on both sides of the aisle, it's a non-denominational crookery organization that runs America, and they get away with it, and nobody's minding the store. And we're giving all this money to the Wall Street banks, which is nothing but socialism. And yet, all of these cheerleaders, all these fangirls, call that capitalism. And the Republicans are supposed to be capitalists, when in fact the Republicans and the Democrats, they are not in any way capitalists, or certainly not free market promoters. They're promoting government intervention. You want to comment on that?
I don't even know when the last time we had a free market was, but I can guarantee you since 2008, we've had basically no market. It's a totally rigged system. And as George Carlin might say, it's a small club and you ain't in it.
Well, on that note, we're going to have to start winding it down. Why don't you tell the viewers the name of your company, how they can reach you, how they can read your articles, and just tell them how to do that.
Well, you can go to my website, which is www.savagefinancial.net. And on the bottom, the last 12 months of articles come up under weekly updates. And you can also find some of my work on Le Metropole Cafe every once in a while. It gets put out by Miles Franklin, also a gold dealer in Minnesota, where they actually do a great job of educating the public, I think. David Scheckman, Andy Scheckman, they're out there, really teaching people. They're they put good information out just about every week. We're up here in Pocono Summit, Pennsylvania, but we do have clients all over the country, from Massachusetts to California to everywhere. And a lot of people have found us because of that dumb little letter we put out. So,
You want to give out your phone number, or?
Yeah, phone number is 570-650-8967. And get me there anytime. So.
All right. Well, thank you very much for appearing on the Bob Unger Show.
Always a pleasure, Bob. Appreciate it.
People say it's always a great pressure to talk to me. And God bless you in regards to your family.
Thanks to you.
Okay.